Now, the stock I want to talk about today is the cheapest stock in the ASX100. It trades on a PE of around 9 times, yet earnings and revenue are growing strongly. It has one of the best brand names in Australia. Qantas. Most people think of Qantas as an international airline, but this business contributes very little to earnings and very little to the valuation. The other 3 businesses are the jewels in the crown. They face much limited competition and they deserve much higher multiples. The domestic business is the bedrock of Qantas's earnings and contributes over half of the profits. Importantly, there's been some structural changes in the domestic market in Australia in the last few years. For many years, Qantas and Virgin were in a capacity war. Virgin thought it deserved 50% of the market, and as a result, capacity, which over 20 years has probably grown at 4% per annum, was growing at times at 10 to 15%. Predictably, yields fell and profits were smashed. However, a few years ago, the white flag was raised, and now the airlines are a lot more sensible, and capacity is now growing around 2% per annum. As a result, profits have recovered. Domestic yields for Qantas grew at 7% in the first half, and this growth should continue. The second jewel in Qantas is Jetstar, Australia's leading low-cost airline. Low-cost airlines around the world have revolutionised travel and allowing the leisure market to grow a lot. And the leading operators in Europe, such as Ryanair in Ireland or Southwest in the US, trade at much higher multiples than what Qantas trades at. And the third jewel is the Qantas Frequent Flyer program. It's the largest and most successful loyalty program in Australia. It has almost 12 million members. And Qantas is seeking to monetise this very valuable information database through things such as travel add-ons like hotels and cars, as well as things like health insurance and credit cards. So 3 great jewels in the crown, but valuation's not good enough for us at Regal. Like Wilson Asset Management, we need catalysts, and we see 3 important catalysts over the next 6 months. Firstly, we think analysts will be forced to upgrade their earnings in August. A lot of them are underappreciating that there's been structural changes and it's not a cyclical recovery in the domestic airline market. The second catalyst will be the payment of fully franked dividend by Qantas, which we think could happen as soon as August. It's been around 10 years since Qantas paid a consistent fully franked dividend. And as a result, the number of Australian shareholders on the register have declined a lot. And we think that once it starts paying another fully franked dividend, which in our view could be as high as 40 cents a share, which would put the stock on a 7% fully franked yield, the stock price should recover a lot more as it attracts a lot more Australian shareholders to the register. And this actually leads to the third catalyst, which is the inclusion in the MSCI index. Last November, Qantas was deleted from the MSCI index because it had too many foreign shareholders and not enough Australian shareholders, which meant that it was hitting at the 50% foreign ownership cap, and as a result, because there was no room for more foreign owners, more foreign shareholders, MSCI deleted it from the index. When that happened, the share price fell 30% over a couple of months. And so we think it could easily go up another 30% this November when it gets added to the MSCI index. So 3 jewels in the crown and 3 catalysts. Regal's very proud to support the Future Generation Fund, and I'd like to applaud what the team has done. And special credit, I think, to Jeff Wilson, who's a good guy, and he's normally a very good investor. But I was at a conference last year when Jeff said that his best investment idea in Australia was Virgin, which is Australia's second airline. Virgin loses money and the balance sheet is very weak. And I think it would have probably gone bankrupt if the shareholders hadn't supported it. Qantas has got more passengers, more planes, and more profits. It trades on an international airline multiple of 9 times, and yet its 3 great businesses, which contribute over 90% of earnings, have limited competition. And as a result, we think it could easily go up 50% in the next few years, and you'll also receive a fully franked dividend at the same time. Thank you.